Good afternoon, everyone, and thanks so much for joining this conversation today. My name is Wes Adrianson, and I'm a manager with our CGI and Climate Initiative teams. We are going to have a Spanish translation available during this session, so if you're interested, please select the closed caption option for that feature. And now I'd like to introduce Mara Pali, Executive Vice President of the Clinton Foundation.
Thank you so much, Wes, and welcome everybody. Good afternoon, and we're so pleased that you can join us virtually today. We know this is a very busy week and you have many opportunities to be involved in virtual events, so we are privileged to have your time with us this afternoon, and we really look forward to an engaging conversation and presentations, and hope everyone walks away feeling like this was a very good use of time. As way of introduction, my name is Mara Pali. I'm the Executive Vice President of the Clinton Foundation, where I have the privilege of overseeing all of our programmatic work, including both the Clinton Global Initiative and the Clinton Climate Initiative. So I am very much looking forward to our discussions today. So we are very pleased to welcome you to this session, Activating Renewable Energy Investment in the Caribbean for a Green Economic Recovery, which is part of our larger Caribbean Resilient Solutions series. As you all know better than most, renewable energy has long been a great opportunity for the region. And now, as the Caribbean grapples with the evolving impacts of COVID-19, the case for accelerating renewable energy development in the region has only grown stronger. We've convened this session with you from across sectors to discuss the opportunities for collaboration on new frameworks and financing strategies to bridge the gap between capital and these important renewable projects. And to provide a little more context, the Clinton Foundation has been working to support the renewable energy transition in the Caribbean since 2012, with the launch of our Clinton Climate Initiative Islands Energy Program, which works directly with island governments and utilities to overcome barriers to renewable energy and to support project development. More recently, following the 2017 hurricane season, we established the Clinton Global Initiative Action Network on post-disaster recovery to provide support to local leaders, nonprofits, and companies, many of you, working to recover in the storms and to build back better. Through this network, our partners have announced over 100 commitments to action and have driven great change in the region. On Monday, in conversations with President Clinton, Prime Ministers Mia Mottley and Alan Chastanet discussed the need for international action to address the shrinking domestic fiscal space due to COVID-19 and the hurdles that this inevitably creates for urgently needed investment in renewable energy and resilient infrastructure. This challenge really frames our conversation today as we consider the current landscape and opportunities for collaboration and innovative approaches. So we are very pleased to welcome our distinguished speakers today who will speak to their timely work in government, investments, multilaterals, bilaterals, and developers on these very pressing issues. So I'm honored to introduce our first speaker, Francine Barron. Mrs. Francine Barron is currently the interim CEO of the Climate Resilience Execution Agency from Dominica, also known as CREED. As the interim CEO, Ms. Barron is tasked, among other things, with supporting implementation of Dominica's climate-resilient recovery plan and the achievement of resilience targets and the delivery of more capital projects. Prior to taking on the interim role at CREED, Ms. Barron held the position of principal advisor to the government of Dominica. From December 2014 to December 2019, she was the Minister of Foreign and CARICOM Affairs of Dominica. We are honored to have her with us here today. Thank you and welcome. So I will turn it over to you, Ms. Barron.
Thank you very much, Maura, for that introduction, and good afternoon to distinguished panelists and all those who are participating in this virtual conference. I want to first thank the Clinton Foundation for convening this dialogue on a topic that is of such great importance for our small island developing states in the Caribbean. CARICOM countries have committed to making the region climate resilient, and an important part of that is transitioning to clean and renewable energy. The COVID-19 crisis has impacted all sectors of society across the globe, but its impact has been particularly sharply felt in the Caribbean, which has been described as the most tourism-dependent region in the world. COVID-19 has disrupted production and supply chains. It has shrunk demand for goods and services, depressed commodity prices, and caused a massive economic contraction with resulting job losses for millions of people. It has also negatively impacted the energy sector, and response measures must include a transition to and an embracing of renewable energy interventions. When these are incorporated into stimulus and recovery plans, the energy transition can represent a far-sighted investment. The crisis has further unveiled inadequacies of the current system, both in terms of our reliance on fossil fuels and massive gaps in energy access. For example, even when there has been a significant decrease in the cost of fuel, the price paid by the end user continues to be prohibitively high in our region. This affects the cost of doing business, particularly in the tourism industry, and the cost of providing vital services. An investment package that is focused on the energy transition can help to overcome the economic slump and create much needed jobs, both for the short term and beyond. Increased integration of renewable energy in our societies provides an additional sector for training young persons and facilitates greater diversification of the economy. Increased uptake of renewables, energy efficiency, and related energy transition measures represent prudent and proactive investment in future economic development. As part of short-term stimulus and recovery plans, the energy transition provides a crucial link to medium and long-term climate and sustainability goals. In the case of Dominica, which has a high potential in geothermal as a baseload source of energy and scalable sources of hydro, wind, and solar power, the country has significant opportunity to harness renewable energy resources to galvanize production, tourism, manufacturing, and the agriculture sector. Dominica is focusing on developing its renewable resources through a series of actions and would be happy to partner with investors. Energy is critical to the functioning and growth of any society, and access to affordable and reliable energy is necessary to build all sectors of the economy. As a result, the living standards and the level of development and competitiveness of the country are all directly linked to its access to energy. For this reason, Dominica has taken a bold step to substantially reduce the cost of energy by developing a 10-megawatt geothermal plant. This is expected to spur growth, reduce energy poverty, and help Dominica achieve its target of 100% renewable energy by 2030. The growing renewable energy sector offers a significant opportunity for advancing green recovery and economic diversification in the region. However, investments in renewable energy can be a costly undertaking, and more progress needs to be made to make diverse sources of capital accessible in the Caribbean so that its full benefits can be realized. Apart from climate-related risks, Caribbean nations face similar sustainable development challenges, including limited human and financial resources, fragile ecosystems, high dependence on imports, and vulnerability to external shocks, particularly spikes in oil prices. The need to transition into cleaner, cheaper energy, for all the reasons stated before, is undeniable. Many countries have defined what they want to achieve and identified what they need to get them there. In the Climate Resilience Recovery Plan for Dominica, one of the stated targets is for Dominica to become carbon neutral by 2030 through 100% domestic renewable energy production. With the help of the Clinton Foundation, Dominica developed a sustainable and resilient energy plan based on analysis of different scenarios and energy generation mixes. The plan outlines action required to increase renewable energy penetration by up to 97% through a combination of bringing thermal online and solar PV, as well as investment in an energy storage facility and upgrades to transmission lines. These investments and upgrades will need to ensure that generation assets are protected from storms and flooding. We have also developed a national energy policy, which will serve to propel economic and social development while lowering environmental impact. The measures in the policy will help commercial and industrial sectors become more competitive ultimately contributing to the country's economic development and its recovery from the COVID-19. It will also reduce the energy cost burden faced by Dominican households and further support the image of Dominica as a nature isle. Hurricane Maria in 2017 left Dominica without electricity to 90% of the country for almost 4 months. In line with our vision to become the first climate resilient country in the world, we will transition to renewable energy, but we will also invest in resilience. We will be seeking to underground our utility lines to protect them from high winds. We will invest in establishing microgrids and backup generation systems in vulnerable communities so that communities can have access to power within 3 days of a climatic event. The challenge that is faced by Dominica and is similarly shared by other CARICOM countries with implementation of our plans to become renewable, 100% renewable, is primarily access to affordable finance and human resource challenges. Achieving 100% renewable status requires significant capital investment, particularly in establishing resilient generation, distribution, and transmission infrastructure. Without access to grant and concessional financing to introduce renewables, the highly indebted countries of the Caribbean that are plagued by climatic and external shocks will not be able to move swiftly to implement changes. There is scope for private-public partnerships that need to be explored and the creation of an enabling environment for investment. For example, we want to encourage a transition to the use of electric vehicles. The government has already announced incentives to encourage people to purchase electric vehicles, but this must be supported by the proper infrastructure of charging stations strategically located across the country. The private sector needs to be incentivized and supported, perhaps by a guarantee fund that will encourage them to make the necessary investments. Investment in renewables will create economic development opportunities and jobs in cleaner and energy-saving technologies. We need to benefit from the transfer of technology to enable our countries to become more efficient in the use of energy and to have access to finance that is adequate, affordable, and available in a timely manner. There is much more that can be said on this topic, some of which I am sure will be covered by the other panelists. So I just leave you with these words. We are committed to pursuing a green recovery. We want to transition to renewables, but achievement of these goals will depend largely on receiving meaningful support from our international partners, donors, and private investments. Thank you.
Thank you very much, Ms. Barron. Thank you for your personal commitment to this space and for truly helping Dominica lead not only the Caribbean, but the world in climate resilience. You have inspired us to work harder, and the lessons learned that you and Dominica are able to offer other nations is invaluable. So we are grateful for your time today, but truly for a larger effort over the years, recognizing much work is ahead, but want to acknowledge the incredible accomplishments that you personally and helping your country have made. So thank you.
Thank you, Maura.
Next up, we want to provide a commitment update. And to do that, I am very pleased to introduce Martin Folkt, Managing Director, Renewable Energies of MPC Capital. As Managing Director at MPC, Martin is responsible for renewable energy project origination. Prior to his role as Managing Director, he was Vice President at Global Capital Finance, where he also started his career and was responsible for executing renewable energy transitions in excess of 1.8 billion euro and 2,000 megawatts of renewable energy power generation. In February of this year, MPC Capital made a commitment to action through our CGI network to address a major barrier to the deployment of renewable energy projects in the Caribbean: access to capital. MPC's vehicle is a large private equity fund, the MPC Caribbean Clean Energy Fund. And through a partnership with CGI, this sophisticated actor aims to engage US-based impact investors, institutional investors, and foundations to raise and invest money for 10 to 15 renewable energy projects in the Caribbean. The new strategy will create 20 permanent jobs, 1,450 temporary jobs, and will result in an addition of 200 megawatt capacity of renewable energy. This is such an exciting commitment and holds so much potential for this issue and for this region. I'm very pleased to introduce Martin, thank him for his efforts, and to hear more about this commitment and its progress. Welcome, Martin.
Thank you, Maura. Thank you for your kind words. And I think, first of all, good afternoon, everyone. Francine has already found the right words, how critical this series is at this time during the global pandemic. And we can really thank Clinton Foundation for hosting this event and bringing all the important stakeholders together who can indeed support the green recovery in the region, and in fact to build back better and greener and certainly more resilient. And with that, I'm very pleased to give you an update today on our commitment. As Maura mentioned before, we joined the network a few months ago only, and we can start with the presentation. Next slide, please. I don't want to bother you too much about MPC Capital, but most of you will likely not know the company. In a few words, we are a German-based investor that acts globally within the renewable energy space. We have invested in the region since over a decade by now, and for us, we have a very strong and clear commitment to the Sustainable Development Goals, also to other factors like capacity building. We are one of the founding members, for instance, of the Caribbean Alternative Investment Association, and also work in the region together with the Clinton Foundation as a partner of the Action Network. We can go to the next slide. Yeah, so here MPC Capital, we just want to demonstrate that we are recognizing the importance of the Sustainable Development Goals. Today, I think we can address a few of them: gender equality, number 5, number 8, decent economic growth, and number 13, climate action. This is why we're here. And with that, we can go over to the next slide, where we have just outlined a few of our environmental and social impacts that we have created through our actions in the region. So this is region specific. These are the numbers for the Caribbean basin. I would like to highlight our contributions to the local communities. This, for instance, included in Costa Rica a bus for single parenting mothers that would otherwise not have the ability to go to work because they would be busy with bringing and picking up their children. Or the construction workers that we are engaging in our solar park in El Salvador at the moment. And together with the Clinton Foundation, and we can go to the next slide, we certainly want to improve and make these numbers even stronger going forward. This is why we are so delighted to become a partner, or to be a partner of this Action Network. This is a picture from earlier this year. And you see here, in fact, we are looking to raise additional awareness, in particular within or among the US investors, given that we believe from a geographic perspective, the Caribbean is obviously of a very strategic focus, and we are hoping to attract additional $90 million in capital to build another 10 to 15 projects in the Caribbean over the next few years that obviously will have a significant impact on permanent and temporary job creation, and also providing houses with low cost, affordable, and sustainable energy supply. So with that, we can go to the next slide, where we just want to show you at the moment some of our activities. At the moment, we have operational projects in Jamaica and Costa Rica. In El Salvador, we are currently building, in the midst of the pandemic, a solar park, so we are very familiar with the impact on the energy sector. In Colombia, we see a very strong support, but Colombia is obviously also a country that suffers at the moment significantly under the COVID-19 situation. And on the next slide, we are showing the projects that we're actually adding in 2020. So it gives you already a feeling of our activities in the region. I think there are not too many others that have a cross-regional approach. You see us acting on the islands: Jamaica, Dominican Republic, Barbados, Puerto Rico are those where we have projects under execution at the moment, but also in Central America with El Salvador, and Costa Rica, and Latin America with Colombia. So with that, these projects will all together be being invested and becoming operational in the future. Jamaica has announced already the tender for the first quarter of 2021, and actually just today we had the pleasure to speak with the Minister of Finance, who also conveyed the message to the private sector that we will play a very critical part in the recovery plans. And with that, we can go to the next slide, where in fact this is the actual update on Building Back Greener and our update on our commitment. So in 2020 only, we have received additional equity commitments over $30 million that will enable us to invest in projects with capital needs of about $100 million going forward, with the execution timeline of infrastructure projects that usually takes 12 to 24 months to be implemented. But with that, I think we are contributing at least a little piece towards the recovery, with creating roughly 1,000 jobs during the construction of these projects, and more than 100 jobs permanently during the operations. And when we go to the next slide, I think what we are extremely proud about is that the capital that is being committed towards MPC is primarily coming from the region. You see here some of the investors that have provided capital in 2020 to the company. And this is also why we really would like to engage with the US investor scene, because clearly the region itself makes the effort to support the energy transition. So we should find enough support among the US investors that certainly have much deeper pockets to provide and contribute also their part in the energy transition of this part of the world. And with that, I conclude my presentation. Thank you for your attention. And again, thank you to the Clinton Foundation for giving us today the opportunity to provide this update on our commitment. Thank you.
Thanks, Martin. It was great to hear about the impactful work that MPC is doing throughout Latin America and the Caribbean, and an update on the ambitious commitment that you guys made on stage at CGI in February. Good afternoon, everyone. I'd like to introduce myself. I'm Sonia Detweiler, and I'm with the Clinton Climate Initiative. And I have the pleasure today of introducing and moderating our first panel on the role of multilaterals and bilaterals in renewable energy finance in the Caribbean. So over the next 25 minutes, you're going to hear from 3 distinguished panelists. And I see them here. Great. So first, I'd like to introduce Benoit Pierre Larame, Senior Director of the Caribbean Renewable Energy Program with Global Affairs Canada. Next, we have Malaika Masson, Regional Energy Specialist with the Inter-American Development Bank. And then we have Daniel Morris, Program Coordinator with Climate Investment Funds. Thank you all for speaking with us today. To start, I'd like to go around and ask each of you to briefly provide a background of the work you and your team are doing in the renewable energy and climate resilience space in the region. So let's start with Benoit Pierre.
Thank you. After 6 months, still looking for the button. Thank you. First, thank you to the Clinton Foundation for inviting Canada to participate in this session. Thank you to Mrs. Barron. I must say that I had the pleasure of working with her and helping developing the vision for Dominica to become the first climate resilient country and setting up the creed. So it's a great pleasure to share the screen with her. As you may know, Canada has deep historical ties with the Caribbean, and our engagement in the region reflects this important relationship. We've been one of the top donors to the region, and we're among the first to provide significant support to climate resilience. For instance, we provide early support to a Caribbean adaptation initiative in 21, which led to the establishment of the Caribbean Community Climate Change Center. We also supported the establishment of the CRIF in 27, which has become a critical part of the Regional Disaster Risk Financing Toolkit, and have since assisted a number of Caribbean and Central American countries in securing coverage. We're also a founding members of the Caribbean Development Bank, which has itself been a key supporter of climate action in the region over the past couple of decades. And we still remain the bank's largest non-borrowing shareholders. Canada's Caribbean Regional Development Program, which I'm the director, is the centerpiece of our bilateral support to CARICOM member countries. And environment and climate action is one of our 4 key sector engagements. Following the 2017 hurricane season, which was referred by Mrs. Barron, Canada pledged $100 million over 5 years to help build the resilience of the region to economic shock and climate change. This pledge has helped our program further ramp up support to climate resilience in areas such as community level adaptation and risk reduction, national capacity building to access climate finance, implement priority climate action, and deliver post-disaster recovery. The CREED is an example of this type of support. Technical assistance for renewable energy and energy efficiency, and helping small businesses and poor households access these solutions, and leveraging private sector investment in renewable energy, sustainable agriculture, and forestry. And all our work, I must say, is aligned with our feminist international assistance policy, meaning that gender equality and empowerment of women and girls are embedded in each of our investments. Just like to conclude on our, say, broad engagement as Canada on this issue. You must know that renewable energy and energy efficiency are important area of support for Canada, linking to issues of both climate resilience, sustainable prosperity. Clean growth is an integral part of Canada's climate strategy, and we have been steadily increasing our global engagement in clean tech. This afternoon in Canada, there will be a speech of the throne, which means for those who are not from the Commonwealth, it means that this will be the policy statement of our government. And we think that one of the key elements of that will be over a green recovery. Finally, the clean tech energy is one of Canada's largest industry, with close to 900 firms registered in 2017. Canadian companies bring innovation to the renewable and energy efficiency space, and Canadian SMEs in clean tech have been especially active in the Caribbean market. These and other clean tech solutions can help satisfy the ambitious commitment of government of the region. And this is I would say when I see Mrs. Barron being here, I think that what we saw in Dominica was meeting one of the key conditions for success in achieving this goal of increasing the climate resilience of the region. It's to having the political will and support. Thank you.
Great, thank you for that excellent overview of what Canada is doing in Global Affairs Canada. We'll dive deeper in a moment, but would love to pass it off to Malaika to give an overview of your work at the Inter-American Development Bank.
Yes, thanks, Sonia, and good afternoon, everyone. Thanks again to the Clinton Foundation for organizing. So I wanted to start off by highlighting a recent article in The Economist on the new energy order, which notes that globally, with bold action, renewable energy electricity could rise from 5% of supply today to 25% in 15 years and nearly 50% by 2050. But really, the key question is how? How do we manage the transition to this bold, new green, clean age? And how do small island states in particular do this successfully? I think that's really some of the key questions we're here to talk about. So at the IDB for the past 60 years, we have been the leading source of development finance in the Latin American and Caribbean region, working primarily with governments and more with the private sector clients to improve lives. We serve 26 member countries, and the IDB is owned by 48 member countries. We work in 17 sectors, ranging from energy, health, education, and tourism, amongst others. And we're known as the leading source of development finance in the region. But I wanted to note that for energy investments, we're just touching the tip of the iceberg, given particularly the fiscal constraints of Caribbean governments. Over the past 10 years, we've estimated sort of internally on average that IDB, just on the sovereign side, that is finance to governments, has provided maybe 10% of that financing demand to energy projects, programs, operations in 6 of our Caribbean countries. But we know that the demand is enormous, right? On a Castalia study we've done, we've estimated that across 13 Caribbean countries, for realistic diversification in the energy matrix over the next 20 years, such that renewable energy is contributing a significant increase in percentage of the matrix, say, for example, 22% on average, and using a least cost approach with resilience interventions, then that cost for that diversification agenda could be approximately $7 billion US. So when I talked about touching the tip of the iceberg in terms of that diversification strategy, that's really what I'm talking about. So we know that we need partners, we need commercial banks, we need private and bilateral donors and NGOs to all contribute to the financing cause. That's for sure. But importantly, just financing those capital investments, those renewable energy projects, is not going to get us to that transformative era that we want to see. That transformation requires support to the entire supply chain, the entire macroeconomic alignment of this new sector for many of those Caribbean countries. In other words, we need to think about the stimulation of an entire new sector that includes projects, institutions, fiscal regimes, regulatory frameworks, processes, digitization of processes and systems, and how energy is linked and related to other sectors like transportation and agriculture, how we promote specialized contractors and upgraded employment and skills. So at the IDB, we're looking at that renewable energy opportunities, both in terms of investments, but also in terms of the other activities that support those investments, particularly like the procurement capacity that's required in countries, regulations, policy reform, and skills upgrading more generally. So I'll give you a couple of examples. I'm the energy program manager, if you like, for the Bahamas and Jamaica. And recently, with the government of the Bahamas, we approved a conditional credit line for investment programs, or CLIP, that focuses on advancing renewable energy in the Bahamas. You know, currently on the energy matrix, renewable energy is just a very small portion of the total energy matrix in the Bahamas. So we want this clip, 170 million of it, to be applied to that advancement of renewable energy in the context of, say, 3 operations, and support not just the investments, but regulatory reform, support to local contractors, training, and communications. So in this first operation, we have an opportunity to establish something quite innovative, what we call the Renewable Energy Entity, that will take this aggressive approach to renewable energy installation in the Bahamas with the active participation of the private sector. So we want this entity to both finance, own, maintain the renewable energy installations, as well as to provide interesting and innovative financing options. So whether it's a guarantee instrument, a blended finance instrument, or perhaps a pure grant offering, the renewable energy will act as that sort of catalyst for pushing renewable energy across the Bahamas archipelago. And although we see it as something that is pushed by the government and started or demonstrated in terms of its commitment by the government using sovereign-based financing, we want those energy assets to eventually be owned by local private shareholders. And so there's an idea that as the assets mature, we will have an IPO process in which we'll invite, just like the Wigton wind farm example in Jamaica, a whole host of private sector shareholders for investing in this new sector. So we've also applied to the European Union for a grant to lower the cost of financing on this clip, and I'll check with me in a couple of months, and I'm sure we'll be happy to announce some good news on that. Similarly, in the case of Barbados, we have approved a $30 million loan to help Barbados establish a smart fund. It's sort of the second part of a first smart fund that was established a couple of years ago. And this smart fund program intends to install at least 11 megawatts of distributed generation in public buildings, investing in efficient and smart technologies during the period of the loan. Also, working closely with the European Union Caribbean Investment Facility, bring down the cost of financing by having an investment grant of approximately 15.4 million to the $30 million loan. In Jamaica, we worked in sort of the early stages with the government on the integrated resource plan, the IRP, or the Master Plan for Electricity. And now we're hoping to support the generation procurement entity, which is the entity for procuring that said, I think it was about 3,000 megawatts of generation capacity by 2037. We'll be supporting the GPE with at least that first round of early tenders and applications for generation, which is, I think, at around 500 megawatts by starting with the first round in early 2021. And here, our support is mostly, again, on this procurement capacity, as I was talking about. What are the rules, the guidelines for generation procurement? How do we make this a lot more attractive in terms of transparency and reliability of PPA agreements to the private sector? In Suriname, we're financing, I'm just talking about some recent projects, 10 solar mini grids with energy storage in the Upper Suriname area with a total capacity of 2,000 kilowatts. The tenders to be launched in the coming weeks. We also are preparing supported documentation and studies to launch the first utility scale renewable energy auction. Again, recognizing sort of the need to strengthen the capacity on the sector. In Guyana, recognizing too that, there we have a now diversified energy matrix, we're supporting the government with regulatory and legal review of what it means to have distributed generation in the country under IPP modalities, so within the interconnected system. And there, where we're looking both at policy, regulations, as well as operations related to solar PV plants, mini grids in the hinterland, and technical studies for furthering the pipeline. And lastly, in Trinidad, we are supporting regulations and legislation for utility scale PV plants connected to the national system. We'll also be providing grant support in terms of studies for the development of energy efficiency measures in public buildings. So that's kind of an overview of what we're doing in 6 of the Caribbean English-speaking countries that we support with the IDB. And like I said, it's not a lone effort. I sort of rattled off a couple of investments, but really this has been, it's quite an intense labor of lots of months of consensus building, of stakeholder engagement, and of working very closely with our counterparts. Thank you.
Great, thank you so much, Malika. That was an excellent overview. Love to hear about the CLIP and the work you're doing in the Bahamas and the holistic approach. It's really unique, and you're really getting to the how, which you highlighted to start. I like that. I'd love to pass it off to you, Danny, to hear about climate investment funds work internationally and how your regional blended finance approaches elsewhere can be applied to the Caribbean.
Thanks, Sonia. Let me start off by saying thank you to you and the Clinton Foundation for including me in really interesting discussion on a very important topic. I think the stage was set well by Ms. Barron in terms of the urgency with which we need to act, especially in the Caribbean region. So let me start off by explaining a little bit about what the climate investment funds are so that it will make more sense as to what we do. We were founded actually in the last economic crisis that we all remember back in 2008. And the founding idea behind the fund was that with large-scale concessional capital deployed through a partnership of institutions that have a track record and have knowledge of developing economies, we could catalyze transformational investments and help create new markets that align with climate goals and development goals. So from there, we have become an $8 billion fund focused on driving climate action through 300 programs in 72 developing countries. Our business model works through 6 multilateral development banks. That's the World Bank, the International Finance Corporation, and the regional bank, including IDB. We provide large amounts of finance that is risk-bearing, patient, and delivered at below market rates that can support projects across all sorts of climate action areas: clean energy, energy access, sustainable transport, climate resilience, and forestry. Our financing comes in the form, it can come in a lot of forms. It's very flexible. It could be debt, equity, guarantees, or grants that support investments in technology and operations that are at the edge of commercial viability. And we try as best we can to help push them forward to bring them to scale. We've seen that our finance can accelerate the uptake of clean technologies in developing countries. Another way to put it, as was mentioned, we were talking about transformation earlier. Transformational investments are what the CIF is built to do. So I want to talk a little bit about some of the work that we've done in the Caribbean. To date, we've invested about $246 million through 22 projects in the Caribbean. 7 of those projects have been to address energy access, and the rest have been to address climate resilience. These projects were able to mobilize over $648 million of co-financing from MDBs, governments, and the private sector. So what we do is really provide an opportunity for others to come in and crowd in different types of financing. And our portfolio has been able to help generate over 800 million of activity in climate action in the Caribbean. Just a couple of things to highlight. In Haiti, we supported 4 projects to help tap the country's renewable potential with an emphasis on mini-grid and off-grid power to provide reliable and affordable electricity to households, businesses, institutions, everyone who needs it on that island where demand is really high and need is really high. Some of those operations included developing solar PV and battery storage plants to extend renewable energy access to 800,000 households and 10,000 enterprises and community action operations. Another one was improving the fiscal and policy environments for renewable businesses. Within that operation, we established a flexible off-grid fund that could help increase investments across the island. And one of our successes was supporting a standalone mini-grid on the island of La Gonave. So that's sort of some of the mini-grid work that we've focused on. Another area where we've been really focused is geothermal, which you've already heard about. There's a great deal of potential, as was mentioned, for geothermal in the Caribbean. The expertise we bring is that we helped finance the first geothermal plant in South America, which was in Chile. It was one of our early investments and really helped put the technology, helped advance it in the region. We worked with our partners to kind of develop lessons learned and bring that forward to our Caribbean operations, where we also helped finance the first geothermal plant in the Caribbean, which was in Dominica, as Ms. Barron mentioned. In fact, our financing was really critical to the exploration phase for that operation, which is the riskiest part of geothermal development. And there's no guarantee that when you drill a hole in the earth, you're going to find geothermal resources that are sufficient to support energy generation. But by using our risk-bearing resources, we were able to help bring that to fruition. We've taken that approach to other parts of the Caribbean. So we've actually partnered with IDB to invest 19 million from our resources and matching 20 million from IDB to support public-private partnerships between small island developing states and geothermal developers in the Eastern Caribbean. So geothermal makes sense for these climate vulnerable small island states, not only because the resource is there, but it's also not as vulnerable to flooding and some other extreme events as other energy sources are. So in that way, our programs can be thought to be supporting both mitigation and adaptation at local and on the small island states, national scales as well. We're not here to talk about resilience, but we've also sponsored a number of resilience projects in Jamaica and Grenada to enhance climate data sharing for improved resilience and disaster risk management and reducing vulnerability. I think I'll stop there for now because I want to be able to get to questions, but happy to discuss more about how to engage the private sector and how we see things moving forward in the region and across the globe.
Thanks, Danny. That's great. I wish we had a lot more time because there's a lot of great topics here to cover. Unfortunately, we only have a couple more minutes, so I wanted to ask you all. The group of people watching this webinar today are people, most of which are part of the CGI Action Network on post-disaster recovery. They come from different types of organizations, but all with an interest in transitioning the Caribbean to more resilient and sustainable forms of energy. In the room are some developers and investors as well. So would love to hear how you think that the folks in the room can work with you. What would you like to say to them? What do you request of whether it's developers, investors, or other types of organizations who are interested in this space that would help you as multilaterals and bilaterals? And I can throw that to any of you who would like to jump in first.
Okay, I'll go first. Well, we certainly need champions of change, whether it be those sort of in higher positions or those working with grassroots communities. We need to be able to align our agendas with what they're doing and be flexible in the way we do things in order to reach a broader set of stakeholders, because the transition requires taking people with us. And so we really need them to be part of that change, to align our agendas when we can, maybe to participate in some of the contracting opportunities, and to provide sort of assistance as we going down maybe the wrong path, so feedback providers. So I think that I'd stop there and say those are kind of some of the ways in which we can work with like-minded folks.
I'll just quickly piggyback off Malika, because my organization benefits from creative endeavoring people like her who go out and find operations to do. And so our experience is that what really helps in these situations is we work through the MDBs, so engagement with the MDBs is a big part of it. But what we also have seen is that when governments kind of put themselves in the driver's seat and they express what their priorities are and they really say these are things we care about, that is what gets the smart people who work at MDBs excited, and that's what trickles down to us to be able to provide the sort of resources that can help catalyze those efforts. So for all you engaged out there, I would say engage with governments, find out what their priorities are, and see if there are ways to align with what you want to do, and really encourage them to be thoughtful and innovative, and then bring it to the partners like the MDBs, and through them, the climate investment funds, to help find ways to facilitate that work and help get everyone on what we hope is a zero carbon path.
Benoit, before you go, can I just add something to what Danny said? Because I think this is really important. Because we're dealing with a new sector, and it doesn't sound like it's new, but it is new in some of these environments we're working in, we don't have all the answers to the best projects. And we're getting them or sourcing them sometimes from resistors. So what we really need to do is have a wider call for proposals. That's something we're seeing, we want to see the benefits of in Haiti, for example. We might open that up more generally to the Bahamas in some of those locations. Get sort of a market response to what are some of the better proposals for renewable energy investments out there.
Can I? Yes?
Yeah, sorry. Go ahead.
Go ahead.
Yeah, okay. We don't work like directly with you investor, but we work with to support, to build the environment that will help you doing that investment. And I think that there are sort of three key pieces on which we work, and the way I would encourage you to work is to work with the government within these three elements. The first one is certainly, and I think that Malaika referred to that, it's in building the national energy framework and building the national capacity. This is something that Canada is doing a lot, and it provides an enabling environment for you to do. For instance, we've got a $5 million fund that lies with the Caribbean Development Bank that help build the capacity of the government. But if you come with a good idea and working with the government of the Caribbean country, they can access these funds to build their own capacity, and you can work with them on that. The second piece is on access to finance. Likewise, we just had approved and launched a Caribbean Adaptation Fund, for which there is $2 million that is there to help develop an innovative finance approach for climate change. And so, therefore, if you work with government in the country where you see that there's a need, that there is an opportunity, you can access. You will not access, but the government with whom you work will access these funds to build their own capacity and work better with you. And the third part is certainly working at the regional level. This is what we've seen so far. We've seen that there's a number of initiatives in the region. There's a large potential, but most of them have been sort of piecemeal, like small initiative. In many places, we need to develop some sort of a standard approach, standard protocol that will sort of multiply the impact of those initiatives. And it's supporting the effort of the country that work regionally. And this is something, because these are small countries, there's no need to reinvent the wheel in each of the country for the many reasons that we know. So let's work within this framework, and what I would encourage you all is to, when you develop an initiative, have these three factors in mind, and there is room to work with your partner, your government partner, using these tools.
Great. Well, thank you so much for those final closing thoughts. It was a pleasure to speak with you all today, and thank you so much for taking time out of your busy schedules and on such a busy week. So that concludes our first panel, and now I'll pass it off to Angela, Angela Rainford is the CEO and founder of Seleco Energy, and she'll be moderating our next panel on the developers and investors perspective.
Great.
Thanks,
Thank you very
Angela.
much, Sonia. Okay, so we don't have a lot of time left. So I'm going to try and see what we can to make the most of this panel. I think it's a really good combination to follow up with the developers and investor perspective, which, you know, hopefully all of the various parts of the ecosystem working together. So I'm joined here by two fellow ladies, which I'm very happy to have an all-female panel. Starting off with Donette Scarlett, who is Senior Vice President for Group Treasury and Asset Management, Sagicor Group, Jamaica. And we also have Susan Shaw, who is the Director and Head of Sustainable Finance. I think given the time that we have left, how I'd like us to proceed is basically, we'll do quick introductions, and then pretty much then I will ask just a kickoff question to each panelist, and hopefully we're going to try to leave enough time to have some questions from the audience, just a little bit of Q&A, so we have that back and forth engagement with the audience who've dialed in and taken the time today. So just quickly on my side, quick intro. So I'm a developer, so I represent the developer side of the ecosystem. I have co-developed the largest solar project in Jamaica. It is a 51 megawatt plant, which was actually referenced on Martin's presentation earlier. That was a $65 million investment. And I'm very proud to say basically took it from all the way from idea through to operation. And that was commissioned last year, June 2019. On the back of that, I've started a second company. So my first company is called Recam Frontier Ventures, and that's focused really more on the utility scale markets. Seleco Energy is actually hopefully transformational in some sense because we're targeting the distributed power market, which to some extent is still nascent in its development. And so we're developing projects currently in Jamaica and in Barbados, and hopefully we'll be announcing in the next quarter some of the projects that we're close to finalizing. So we're actively having discussions with investors on a pipeline of projects that we have developed from scratch. But I want to really spend, you know, even as a little bit of a snippet on the developer side, I want to spend more of the time on the investor side. And we have representation from the institutional investment and then also what people like to call impact investments. So just Donette, I'm going to kick off with you if that's okay. Put you on the spot. So just a quick intro as to what your work at Sagicor Group Jamaica, that would be super helpful.
Okay. Good afternoon, and thanks to the Clinton Foundation for inviting Sagicor to participate in such an important event. I am Senior Vice President, Group Treasury and Asset Management at Sagicor Group Jamaica Limited, and my responsibilities span the gamut of investment assets. So we span real estate, securities, bonds, equities. We manage pension funds, mutual funds, property management, real estate sales, the whole gamut, as I said. In that role, we have an integral part of that in terms of our investment strategy is to find suitable investments for our pension funds, for our funds under management. And that is why we are here today for Sagicor to explain or to expound on our value proposition that we saw in investing in MPC.
Okay, perfect, Donna. Thanks for kicking us off. Suzanne, just a quick introduction on your side. Suzanne, quickly, just you're on mute still, just as a heads up. We want to hear what you have to say.
So I'm co-founder of the Leap Co. We are a company that supports businesses and projects to deliver positive social and environmental impact alongside solid financial returns. So what that really means is finding the intersection between sustainability and profitability, which people often think are at opposing sides of the spectrum, but in fact, they go hand in hand in terms of long-term profitability and having sustainability in your business model. And a significant part of the work I do is focusing on quantifying economic and financial benefits and costs that are not represented in the market. So when we think about renewable energy, that would be things related to greenhouse gas emissions, building climate resilience and jobs, and making sure that these things are factored into the valuation of projects and how financing is structured and directed.
Okay, perfect. Thanks, Suzanne. So Donette, just kick off with a quick story. So when I was in the process of developing Paradise Park this was early, I guess when we were awarded the project in 2016, I must say that we struggled to get interest from the pension fund community and the local investor community, not just in Jamaica, but also across the Caribbean. So I think that was probably a little bit early. And so I'm really impressed and happy to see that Sagicor Jamaica has taken that step to invest in groups such as MPC on the Caribbean Clean Energy Fund. So maybe just for the audience, you're a trailblazer. What was the value proposition that you saw? What is it that you have learned? And what is kind of the feedback that you would give to other investors, institutional investors who are looking at that space?
Well, the value proposition really arises from basically who Sagicor is. Sagicor is a company that is committed to investing in the communities in which we operate. And within that sphere, we have a number of corporate social responsibility activities that span health, sports, education, and environment. And in this case, that's what MPC represented for us. The value proposition, however, Suzanne just mentioned that as investors, we have to put the balance, we have to do our required due diligence with transactions of this sort. Our ultimate is to provide return to our investors. So the value proposition started with the returns that you can get in investments such as these. We then further would have looked at varying things, the fund manager, which is important. So our due diligence process went through assessing the MPC team that would be managing the asset that we would be investing in, because of course, that's not our core strength, and therefore we would rely on the management team.
Not yet.
On the ground. In addition to that, the diversification benefits in terms of the structure for MPC across the region was also important. Different countries, different types of renewable energy sources. And as I touch on different types of renewable energy sources, let me kind of segue into the other question in terms of what we've learned through the process and what would we say to other domestic investors. The investment in renewable energy, obviously, and the prior speakers kind of set the stage for that, is that there is a regional focus on renewable energy. There is public sector commitment to renewable energy, not just in Jamaica, which I'm familiar with, but what we've heard here, and just through our involvement with MPC, seeing the different collaborations within the government. And that's a very important terminology, collaboration. And it came out a lot, I would say, in the prior speakers. We need to collaborate. Renewable energy is very capital intensive. The private sector involvement is critical. And it's not an involvement that takes away from investors, pension funds, fund managers, realizing the returns they require. It can provide very attractive returns, and it is just necessary for us to go through the process, go through the due diligence, so that we can assess the value proposition at each stage and recognize that the other impact from renewable energy investment, not just economic, is a socio-economic. Someone spoke about jobs and all the other benefits that can be derived and how we should partner to arrive at that.
And Donna, I would just add, from the developer's perspective, I am happy to have local institutional money in our projects. Now, why does that matter? Because it means that we have the country aligned with the project. And I think that is super important for the sustainability of the project and the long-term, relationship that we have with the community and with the government. I mean, these projects, as you know, tend to be this is a 20-year project, yes. Right? This is 25 years. This is not a 2-year turnaround. So to have, especially because especially in the Jamaica project, which I can speak to, we have a blend of the international investors, international development banks, and we have local investors. I think it's a really good nexus of stability for the project to ensure that all hands are on deck, and that if there were any issues, I think it's, you don't want what they call fly by night, right? You want groups that are invested and rooted also in the country. So I think it's very good to have that combination combined with the perspective that you get from international investors. Suzanne, I'm going to keep both of you speaking. So from LeapCo's perspective, so impact investment, I guess one of the questions I ask you is, how do you think businesses can position themselves to attract impact investments? And secondly, you made an interesting point earlier about the other elements besides the commercial aspect that you are looking to quantify. Can you tell us a little bit about how you're assisting businesses, governments, organizations, and that added element of quantification?
Sure. So the first aspect of being able to attract impact investment is to really be aware of what your impacts are. It sounds obvious, but there are a lot of projects and businesses that are not aware of their positive or negative impacts that they might be having with respect to the environment or climate resilience in general. And that is a key barrier to be able to have private sector engagement on issues like climate resilience. Once the awareness is there, the second part of it is being able to quantify or represent impact in a tangible means, which means something to investors, because they will want to be able to measure and monitor the impact that their investment is having. And in terms of specifically what issues can be treated alongside the financial aspect that I referred to earlier, one key aspect is climate risk and climate resilience. So again, here is a typical example of where profitability and sustainability are just going exactly hand in hand. The ability to be climate resilient is really an assurance that your business or project will be sustainable and financially viable in the long term. And something that we're working on at the moment is develop a climate resilience index, which is actually a rating framework to allow projects and businesses to assess the climate resilience of their business model and their business operations. And going through this climate rating framework, they will become more aware and able to identify themselves, what are climate risks and also opportunities. They'll be able to assess them, implement management frameworks, and also to identify governance and engagement measures that they can undertake to improve their climate resilience position. And in this way, they demonstrate a commitment to climate resilience, but they can also have a means to engage with investors who are interested in this area, whether they perform well on a climate rating index or not. So if they're a good performer, it's great. It shows that they're committed. They've already undertaken a number of steps to become climate resilient, and investors who want to increase their impact through that way will target those companies. Companies that don't perform as well can use that to justify requests for financing through climate financing vehicles that are available. For instance, the Green Climate Fund, which is specifically targeting the building of resilience within businesses and projects for instance, in the energy sector. So using this, by going through this process of rating themselves through the climate resilience index, they'll be able to identify the areas where they need to build resilience and justify the need for additional investment to ensure that they meet that gap and ensure their profitability over the long term.
Right, and I'm really pleased that because my prior life to becoming a developer was actually in the private equity side. So I used to be an investor. I used to be one in between the two of you ladies. And they love numbers. They love quantification of things. And so I think having that element that you add to it is super important to frame the projects. And, it's not just, as you call it, like the triple bottom line. It's, even for our project, like community engagement, how do you quantify community engagement? It's almost impossible, but it's super important, because if you're developing a hydro plant or as we did a solar field, and all of a sudden the community starts picketing around the fence saying, we don't want this project, that is actually, that's a direct cost to your project. If not, it can kill the project because you wouldn't be able to get access to financing. So I think that's super important. Okay, so we have a question from the audience, but before we go there, I'm just checking the time. I think we only have a few minutes. How can institutional, just a quick fire question to Donette and to Suzanne, and this is an elevator question. If you were to meet your counterpart, Donette, as an institutional investor, if you were to meet an impact investor in the elevator and you wanted to work together on a project, what would you look for in that impact investor?
Well, I suppose you start with having commitment to the goals with regards to sustainability and renewable energy. Also, the ability to assess and provide input, valuable input towards evaluation of projects that we would look to contemplate. And thirdly, expertise in terms of knowledge of the industry, knowledge of the sector, and just knowledge in general of what happens within the space regarding renewable energy investments.
All right, perfect. Suzanne, you got lucky. You're after Donette to answer that question. Fireside chat.
In terms of partnering with institutional investors, essentially a receptiveness to the broader economic and social impacts that energy projects or any project or business has on the environment and the economy, and an appreciation that those specificities require also building into the financing model and how financing is structured, and that different projects require flexibility in how they're financed. So blended finance, I'm a big fan. It meets, it has the capability and flexibility to meet different needs, whether that's equity, concessional financing, technical assistance, that kind of thing. So essentially being nimble, I would say, for an institutional investor, I
would agree with that. It tends to be very, very, very slow. But no, I would agree with that. Okay, so question from the audience. Given the structure of Caribbean energy supply, with many energy businesses locked into high cost infrastructure, how much resistance is there to transition to green energy, and how are you addressing this resistance? How much resistance is there to transition to green energy, and how are you addressing this resistance? Don't know if anyone wants to kick off with some ideas. I mean, I may also just help you guys out a little bit. I think it depends on what you define as locked in, right? I mean, I think who are we talking about in the energy value chain? So clearly you'll have the utility companies who have already made a significant investment, and that may in and of itself have a high cost infrastructure built in. But I do think that they are looking to change that. I wouldn't necessarily say there's significant resistance to transition to green energy, because that question implies that green energy is more expensive. And I would always assume that whether you're a generator or a consumer, if the cost itself, if the hurdle rate for you to get over to make the investment required to transition is not too prohibitive, then you would always be incentivized, at least economically, to move to the lower cost infrastructure. So I don't know, ladies, if you agree with that, disagree with that. Suzanne, do you want to?
Yeah, I can piggyback on that. I agree that, okay, maybe some time ago, there was a lot more resistance to renewables because nowadays, essentially, we're looking at a technology that can deliver energy at very competitive costs and prices. I mean, Angela's project is a key example of that, 8.5 cents.
Thanks, Suzanne. I'll take that.
Per kilowatt hour. So whereas there was resistance before, primarily from a cost perspective, we're seeing that it has come down drastically. There's also a lot being done in terms of the intermittency, which was another key resistance factor. Storage costs are coming down, which will help with this intermittency factor. And I think that the market has really started to wake up. And there is a demand also at the consumer level, which has helped the market to wake up. So I would say there's not as much resistance as before. What I would say in terms of dealing with this heavy centralized infrastructure is that, and the cost that that entails, is that renewables are also part of the solution in that they're very suited to being distributed energy generation, which then kind of, it moves a bit away from this very centralized, heavy cost transmission and distribution system, and allows a greater level of freedom in how you tailor your energy system to specific needs and distribution centers. So that would be one solution that I would propose, to focus on how renewables can go maybe beyond just utility scale projects or large utility scale projects, and be more integrated at the commercial, industrial, and even residential level.
Okay, Donna, I think Suzanne saved you, because we are out of time. So, but I agree with you, and that's a good plug for my new company. Thanks, Suzanne. So I'm going to hand it back to the Clinton Foundation. Thank you very much to all the audience. Thanks, Wes. Bye.
Excellent. Thank you so much, Angela. And thank you to all of our phenomenal speakers and panelists for participating today. We're so grateful for your time and, of course, your insights and expertise in this very dynamic and interesting conversation. Please do feel free to reach out if you'd like to continue this conversation going forward. I think my email is there on the screen. I'd also like to quickly mention our event tomorrow, which is related to COVID-19's public health impacts and moving forward on the health front. This will be with Chelsea Clinton at 2 p.m. Eastern Daylight Time. With that, this recording will be available online on the website, and I think on the Clinton Global Twitter. Thanks so much for your time, and hope you have an excellent afternoon. Thanks, everyone.